Well, hi everyone. It's Russell here from Enhanced Asset Management. And excitingly, we're just a few days out from Christmas and some well deserved quality time with family and friends. Now, this will be our final video update for 2024. We'll give a brief wrap up of the year just gone and what we're seeing may develop in 2025. Well, overall, it's been pretty good for year for financial markets. Actually, this is the second year in a row that I can say this. It's been a pretty amazing period for financial markets generally. In particular, it's been super strong for the US equity markets, and narrowing it down a little bit further, a very strong period for the Magnificent Seven and technology sectors more broadly. This is something we've discussed at length in our quarterly reports as an investment thematic that just keeps on giving. But remember, nothing ever goes up in a straight line. There will be bumps along the road at some point, so just expect that they may happen. Over in Australia, while 2024 has seen a buoyant equity market generally, it really has paled in comparison to the US market, which we can show here. Australia has been generally a sound but very patchy economy, so our market in general has been up anywhere between sort of 10 and 15% and currently sits at the low end of that range. We've had a very resilient consumer in spite of the higher mortgage rates we've got here and increased cost of living. But we've had a stable government, and from a monetary policies perspective, interest rates have remained on hold this year off the back of a very strong employment and softening inflation. So, from an equities perspective, we've seen good areas of growth, especially in those companies that are exposed more to the, not surprisingly, the tech industry, but also in healthcare and infrastructure spend, which benefits from the continued government spending and aging populations. But on the flip side, we've had commodities which have been significantly under pressure. Now, this probably explains our market's material underperformance versus the US, as it's a very important industry for us, both from an economic perspective, but also from a market return perspective. Australia, though, is in a very strong physical position, and we're seeing some signs of confidence returning, both within the consumer environment, investors, and corporates. So that's really what's underpinning our optimism for the year ahead. So if we look back a whole year, or this whole year, it's been a strong year for returns, and coming into 25, we're cautiously optimistic, but we do know that it's a mathematical impossibility that equities can keep rising at the pace they have been. Just expect some moderation, as it's most certainly coming. We do note that we don't have the same level of valuation support that we might have had a year ago, when stocks were generally cheaper. They now look more expensive or more on the expensive side, no matter how one slices the data. But in saying this, we've got most central banks now around the world cutting interest rates, is of course supportive for financial markets and valuations, and it's also helpful for the consumer. We've had some election chaos in parts of Europe. We're expecting that to be resolved, possibly some stimulus coming through, especially for Germany. And we're also hopeful, of course, of peace in the Middle East and something positive happening within Ukraine and Russia with President Trump coming into power. Now, the unknowns at the minute stem mostly around in terms of the US what tariffs will come into be, whether or not tax cuts will come through, and of course the impacts that they will have on the market. But generally, at the moment, the US consumer is also very strong. Interest rates have been coming down a little bit. So it remains a very generally a very supportive environment for equity markets, absent some kind of black swan event, which we can never predict. Now, just in terms of December, markets have been a little bit different to what we might have thought possibly after November and the very strong returns. And as we record this, the general market has been a little bit soft and weaker. It's surprising to read just last week that the Dow Jones has been down 10 sessions in a row, which is actually the worst losing streak the Dow Jones has had since the 1970s. So you'll probably find that the portfolio is generally a bit weaker coming into the last quarter of 2024. But as they are like us, just having a bit of a breather. But always remember to zoom out. And as a reminder that these returns generated by the Aussie and the US markets have the last 5 years, and they've been quite exceptional. Finally, we thank all our loyal clients for the journey most of us have been on for the past 5 years. It's gone past pretty fast, I think you admit, but we like to think it's been a successful one. And so for all of us here, we hope you have a fantastic Christmas, a very nice holiday summer period, and we look forward to catching up with you in 2025. So that's all for us. Just remember, this is all general financial information. We'll see you in 2025.